Welcome, crypto fam, to No One Daily Bitcoin Pod. In today's show, I'll be sharing the latest Bitcoin technical analysis. As you can see, we're correcting down 5,000 on the day. But the silver lining is there's a new record Bitcoin hash rate. And as you know, the pretty bitty follows the hash rate, so new all-time highs in play. We'll also be discussing Alabama. Minnesota lawmakers join the U.S. states for pushing for the Bitcoin reserves, as well as breaking news. Asset management giant Fidelity introduces retirement accounts with minimal fee, crypto investing. Ultimately, the accounts allow for buying and selling Bitcoin, Ether, and Litecoin under a 1% spread fee. We'll also be discussing Bitcoin at risk of institutional capture, warns Jack Dorsey. We'll also be discussing 180,000 Bitcoin price action incoming within the next year, predicts investor Dan Tapiero. I'll be breaking down his forecast and timeline. In breaking news, Larry Fink says Bitcoin could replace the US dollar as the world's reserve currency because of the national debt. I'll be breaking this down for you. We'll also be taking a look at the overall crypto market. All this plus so much motherfucking more in today's show. If you're new to the channel, important, smash the likes. Go ahead, subscribe, then hit the bell. Turn on all notifications to receive daily premium crypto newsletters every single day, 7 days a week, just like this. Today is pod episode 1952. I'm your fearless host, JV, alongside the chairman of the SEC, Nebinator. And of course, the market's pulling back here. We're down 5,200 on the day. We just went under 82,000. We'll see how the market's likely to react. Obviously, it's been reacting very negatively to the Trump tariff announcements, which were made yesterday, and all financial markets have been dumping since then. But let's kick it off with our market watch, as we do each and every day. You can see on Coin360. Actually, I guess let me share my screen here. One moment, broskies. Caught me slipping today. There we go. So as you can see, everything in the blood red. Bitcoin down 6% on the day, back under 82,000 after tapping above 87 yesterday. I told you guys expect extreme volatility, and exactly what we got. Ethereum, good Lord, down 7% on the day, trading back in the $1,700 range. Solana down 13%, XRP down 7%, Cardano down 9%, just wreck city across the board. And checking out coinmarketcap.com, broskies. As you can see, the total crypto market cap today, 2.62 trillion. The Bitcoin market cap all the way down to 1.6 trillion. We got roughly 128 billion worth of volume for the past 24 hours, with the Bitcoin dominance coming in at 62% even, and Ether dominance at 8.2%. Checking out top 100 crypto gainers past 24 hours. We have looks like a stable token I've never seen before called First Digital USD. Interesting. Leading the pack because virtually everything is correcting and in the red, hence why stable coins are leading the pack on the day. And checking out the crypto bubbles, we get a visual perspective on the day. Jeez Louise, like 97% of the market in the red. Zooming out on the weekly, very similar story. And zooming out on the monthly, very similar story. And checking out the Crypto Greed and Fear Index, I guess the silver lining, we're back in extreme fear. And as you know, the lower this number goes in extreme fear, the more likely of a pump. So you guys let me know if you think the bottom is in, or do you think we'll continue to correct even lower? Yesterday was a 44, last week a 40, and last month a 15 in extreme fear. And checking out the infamous time chain calendar. We have 159,280 blocks until the halving of 2028. We're currently on block number 890,720, and you can currently exchange one fiat monopoly dollar for 1,222 sats. Pick up the sats, put down the gats, pick up some Bitcoin caps from my man Sergio over at bitcoincaps.net. Here's a little technical analysis, aka astrology for the broskies, and as I always promise, we'll pull up some of the live charts. Bitcoin price risks a drop to 71,000 as the Trump tariffs hurt U.S. businesses. That's right. Bitcoin faces a very high risk condition for the U.S. trade tariffs, which can spark a slump all the way down to 71,000, as per Charles Edwards of Capriole Investments. As you know, Bitcoin reacted noticeably worse than the U.S. stocks after Trump announced worldwide reciprocal trade tariffs yesterday. Bitcoin fell 8.5% on the day, while the S&P managed to end the Wall Street trading session 0.7% higher. Edwards said the U.S. business expectations reflecting the type of uncertainty seen only 3 3 times since the turn of the millennium, quoting the analyst here. Consider this, as tariffs come in higher than expected. The Philly Fed Business Outlook Survey is showing expectations today comparable to 2000, 2008, and 2022. The chart you can see on your screen showed Philadelphia's Fed Business Outlook Survey back under 15 for the first time since the start of last year. In late 2022 was the pit of the most recent crypto bear market when we bottomed at 15,600. Now, in Capriola's latest market update, Edwards acknowledged that this data can produce unreliable signals regarding market sentiment, but argued that it should not be ignored. Quoting him here, while no guarantee of the future outlook, this metric does have fake signals or false signals. This is a data reading we have had before at very high risk zones back in the year 2000, 2008, and 2022, telling us to keep a very open mind, especially if the tariff war escalates significantly beyond the current expectations or the corporate margins start to fall. For Bitcoin, a key level to watch in the tariff aftermath is 91 Gs. That's right, suggesting the U.S. macroeconomic moves would decide the ultimate technical trend from here. All else equal, a daily close above 91 Gs would be the start of a bullish reclaim. And also failing that, a dip all the way down to 71,000 could be in play, which would likely see a sizable bounce. Come on, bounce. Pretty little bitty. Now, the silver lining for crypto and risk assets could come in the form of increasing global liquidity in the U.S. The Fed has already begun to loosen the tight financial policy with bets on a return of the so-called QE. And as I shared in yesterday's stream, Arthur Hayes just blazed, projecting we still hit 250,000 before the end of the year due to these macroeconomic conditions. But I do want to share some of the live charts, but I also want to remind you the silver lining. New record Bitcoin hash rate, pretty little bitty. Price always follows the hash rate. That's the key indicator we want to look at. So it's a good sign. Bitcoin continuing to do its thing. And let's pull up some of the live charts for the broskies, of course, here, and the bitty baddies holding it down. You should be able to see here on your screen live action chart Jackson. 10-minute chart on your screen via Coinbase via TradingView. Obviously, we got some sideways trading action. We do have a bear target on the radar, a bearish pennant sitting just shy of 77 Gs. So that's why some of the analysts are calling for a correction down there. You guys let me know your thoughts. Zooming out to the hourly chart. As you can see, we do have a bull target in the orange sitting at 96.5, and then a couple of bear targets, one at 79 and one all the way down at roughly 73.5. Zooming out from the hourly, we take a look at the 4-hour chart. And a lot of action here, rising wedge formation, a few bull targets, the Super Bull 113.7, which would take us back to price discovery. We also have a bull target in the red sitting at 105.5 and one in the orange sitting at 96.5 and a couple of bears, one at 79 and one all the way down at 73. Zooming out from the 4-hour, taking a look at a daily chart. You can see big red candle formed for yesterday and already a red candle forming today. The day before, we finally had a nice green pump. 2 bull targets scenarios, one sitting at 113 and one sitting at 113.7. And again, that takes us back to price discovery, and a couple of bear scenarios as well. Zooming out from the daily, we take a look at the weekly, and the weekly, unfortunately, is already forming a red candle. Last week was a red candle. The week before that and the 2 previous weeks before that were 2 green itty bitty candles. Then before that, we had the big bearish candle that took us to the current bottom. And we still have silver lining here, cup and handle target on the screen, sitting at 124,000 here on the weekly chart, and we still have a few days until the weekly close on Sunday. And zooming out on the monthly, thus far, April has been a bit disappointing. Clearly, the tariff news did not help, obviously. But we'll see how we play out. The month is early, and again, this is the first month of Q2, now that Q1 is in the books. Next headline here, Alabama, Minnesota, lawmakers join the U.S. states, pushing for the Bitcoin reserves. It seems like practically every state is pushing for this, which is a good sign. Lawmakers in the U.S. states of Minnesota and Alabama filed companion bills to identical existing bills that, if passed into law, would allow each state to buy the bitty. That's right. The Minnesota Bitcoin Act, HF 2946, was introduced to the state's House by Republican Representative Bernie Perryman on April 1st, following an identical bill introduced on March 17th by GOP State Senator Jeremy Miller. Let's go. Meanwhile, the same day in Alabama, Republican State Senator Billy Barfoot introduced Senate Bill 283. And you pick up, I got my Alabama accent. While a bipartisan group of representatives led by Republican Mike Shaw filed the identical House Bill of 482, which allows for the state to invest in the crypto but essentially limits it to Bitcoin. Smart. Now, twin Alabama bills don't explicitly name Bitcoin. Minnesota Bitcoin Act would allow the state's investment board to invest in state assets in Bitcoin and other cryptos to permit state employees to add crypto to retirement accounts. It would also exempt crypto gains from the state income taxes and give residents the option to pay state taxes and fees with Bitcoin. As updated here, Alabama Update, a second Bitcoin reserve bill was introduced today into the Alabama Senate, SB 283, in a companion bill to House Bill 482, meaning the two identical bills have been introduced concurrently to expedite the legislative process. Alabama, let's go. The twin Alabama bills don't explicitly identify the biddy, but would limit the state's crypto investments into assets that have a minimum market value of $750 billion, in which Bitcoin is the only one that qualifies for. Now, introducing identical bills is not uncommon in the U.S. and is typically done to speed up the bicameral legislative process so the laws can pass more quickly. Bills to create a Bitcoin reserve have been introduced in 26 U.S. states. That's more than half the United States. With Arizona currently the closest to passing a law to make one, according to data from the bill tracking site Bitcoin Laws. Let's go, Arizona. Now, Pennsylvania was one of the first U.S. states to introduce the Bitcoin Reserve Bill back in November last year. However, the initiative was reportedly eventually rejected, with similar bills also killed in Montana, North Dakota, South Dakota, and Wyoming. Now, according to a March 3rd report by Barron's, the red states like Montana have faced setbacks to the Bitcoin Reserve initiatives amid political confrontations between the Democratic Party and the Republican Party. Go figure. But there you have it, yo. State adoption coming probably a lot sooner than the nation state adoption. But what are your thoughts on that? And do anyone here watching the stream live in Minnesota or Alabama? Let me know. But yeah, next story of the day. Let's discuss this big news coming from Fidelity. Headline reads, Fidelity introduces retirement accounts with minimal fee, crypto investing. That's right. Fidelity is worth $5.9 trillion in assets under management. They just introduced a new retirement account that will allow Americans to invest in crypto nearly fee-free. And ironic, I have a family member who does investing through Fidelity, and they brought up Bitcoin, and they're like, financial advisors like, we don't recommend the Bitcoin or the crypto. So it just goes to show you how clueless these financial advisors are, The three accounts, a tax-deferred traditional IRA and two Roth IRAs, permit the buying and selling of Bitcoin, Ether, and Litecoin. And while there are no fees to open or maintain the accounts, Fidelity charges a 1% spread. I think that's lower than typical because I'm told they charge like 4% spread on stocks. So 1% is a significant discount to buy and sell for crypto transactions, I guess to help encourage people to do their crypto on the platform. But here's the difference. My understanding is when they're investing in crypto for you, you're not holding the private keys. They're holding it for you in a portfolio. And as you know, not your keys, not your coins. So I just want to throw that out there. The crypto IRAs are offered by Fidelity Digital Assets, subsidiary of Fidelity that has traditionally offered institutional investors the opportunity to buy and sell crypto. And correct me if I'm wrong, but I believe Fidelity, as far as the what is it called? The ETFs are concerned, they're one of the few ones that actually do the self-custody, meaning they're not using Coinbase as their custodian like BlackRock and the rest of them. But the broadening of its client base may be another signal of the changing crypto landscape of the U.S., which has seen the adoption of a strategic Bitcoin reserve in multiple companies, including stablecoin issuer Circle, filing for an initial public offering. Fidelity states that for security, it holds the majority of the crypto in cold storage, which consists of crypto wallets not connected to the internet. Now, while the direct purchases of cryptos in the IRA have never been strictly prohibited, few IRA providers have allowed such purchases, according to Investopedia. Therefore, Fidelity's new IRAs may signal a change in the environment. Still, for enthusiasts of Bitcoin and Ether, there have been other options since 2024, such as the ETFs. And since the debut of those ETFs, investors in the US have been able to gain exposure to the crypto market from their retirement accounts, depending upon the brokerage. There has also been the rise of the Bitcoin IRAs, which are self-directed retirement accounts that offer tax advantages. Some crypto companies offer digital asset-specific IRAs, like Bit IRA, where individuals can add altcoins such as Litecoin to their retirement portfolios. The move to allow more Americans to invest in crypto into their retirement accounts may be gaining momentum. On April 1st, Alabama Senator Tommy Tuberville announced the reintroduction of the bill to allow Americans to add crypto to their 401ks. The process would involve scaling back regulations issued by the Department of Labor. And if you don't know, now you know. Next story, broskies. Let's discuss a little bit of this institutional drama. As per Jack Dorsey, and as you know, he's a Bitcoin OG, Bitcoin at a risk of institutional capture, warns Jack Dorsey. In a 21 and 21 rapid-fire interview with Haley Burko of San Francisco's Presidio Bitcoin Workspace, Dorsey, the CEO of Block and former founder of, chief technology officer of Twitter or whatever, founder, cautioned that Bitcoin's growing popularity amongst other financial institutions can threaten the open ethos that gave rise to Bitcoin. Quoting him here from the interview, it probably harms it a bit, referring to the institutions. Yet he acknowledged that large-scale involvement is practically inevitable, adding, I think it is so obvious that we'll see more of it, and I hope that more people take on the principles of what made Bitcoin successful in the first place. Speaking of the emergence of institutional giants like BlackRock, Dorsey emphasized the permissionless nature of Bitcoin, to be able to work on a money transmission protocol that is entirely open, that has converted the likes of BlackRock or these major institutions that we rallied against in the past. And now they have to turn their attention to it. And yet you still don't need their permission to build on it. Where else can you find that? Dorsey's comments come during a conversation that spanned everything from his early interest in the old cypherpunks to the projects Block is building to strengthen the core infrastructure. He highlighted ongoing work on an open source mining rig and chipset, as well as BitKey, a self-custodial wallet, and Block's integration of Bitcoin into Cash App. One of Dorsey's main concerns is that Bitcoin might end up sidelined if it focuses too narrowly on serving as a store of value. Quoting him again, I think it fails through irrelevance, like it just fails to be relevant to people on a daily basis. And according to Jack, ensuring widespread use for payments is key to making Bitcoin indispensable. Quoting him again, if it just ends up being a store of value and nothing more, I don't think it gains relevance at all. I think it has to be payments for it to be relevant on the everyday, warning that otherwise Bitcoin risks just not showing up in people's lives and slipping into obscurity. A noted Bitcoin advocate, Dorsey nonetheless believes that focusing solely on the Lightning Network, a leading layer 2 solution, could limit Bitcoin's evolution. Quoting him again, I think we can do better than Lightning, he said, clarifying that while Lightning isn't bad, it's merely one option. I don't think we just want to settle with having one layer 2, he explained, emphasizing the Bitcoin benefits most from experimentation in payments and other applications. Dorsey consistently returned to the importance of the open source development, urging companies to fund Bitcoin Core and other community-driven projects without exerting control. As he shares here, having some sort of granting ability to open source developers is important, praising initiatives such as Spiral, a Bitcoin-focused division of Block, along with independent grant programs like Brink and OpenSats. He also mentioned that emerging role of AI and its interplay with the Biddy, envisioning a future where agents could seamlessly transact on behalf of the users, is all about who you're asking permission from, he said. Development goes faster if you have to ask for less permission, and the setting of the interview, Presidio Bitcoin underscores Dorsey's belief in bringing real-world communities together to foster deeper engagement. Quoting them here, I think this is great because it is a bridge between Silicon Valley and all the energy down there, and Bitcoin, highlighting the need for physical spaces where ideas can germinate into tangible projects. And from building more accessible wallets to reinforcing the permissionless nature of Bitcoin, Dorsey sees plenty of work ahead, and when asked what single thought he would leave with newcomers, he insisted that nobody should rely on one person's word. Good advice. His included before diving into the space. Don't listen to any one single thought about Bitcoin. What makes Bitcoin special is it's permissionless. You don't need anyone's permission to build what you want to see. And there you have it, coming directly from Jack Dorsey. Let me know your thoughts. Next story, let's dive into Dan Tapiero's 180,000 Bitcoin price target within the next year. And yesterday and the day before, we dove deep into Arthur Hage's Blaze projecting still 250,000 price target before the end of the year. But today we're going to focus on Tapiero's thoughts. He was just interviewed on the Talkin' Tokens podcast and says Bitcoin can go up around 112% from the current level during this current cycle. Let me know if you agree with that. Quoting him here, we'll head up to, I think, 180 Gs, which is 3 times the previous peak. In 2017, the peak was 21,000. Then we went 3 times that to 60,000 in 2021. Well, 69 was the top. And now I think we go 3 times again, which again takes us to 180. I think we should within the next year or so. What is it? March now? Yeah, within the next year or so. And over the longer period, the macro investor and fund manager says that Bitcoin could hit 7 figures. Now we're talking. Quoting him here, I think we can get to 1 million per coin on Bitcoin in 10 years. And I think it will stop there for a while. 1 million, 10 years. So that's $20 trillion of value regarding the total market cap. And on the Bitcoin key psychological price of around 100 Gs, Tapiero says, I think 100,000 is a number where people who have been long for a long time, from $1 to 100, from 1,000, where they're in their mind just said, if it ever gets to 100,000, I'm going to sell some. And I am not going to necessarily sell it all. But you can imagine if you've owned this at $200, $500, and if you bought in at 2019 at 5,000, 6 or 7, even if you bought it at 10,000, you're like, you know what? If it goes up 10 times, I'm going to buy that house, that I wanted to buy. So there is a natural, I think, selling ceiling that will take time to digest. Now, for how long? Weeks, months? Hell, I don't know. At least he's honest. Shout out Dan Tapiero. Respect. And let me know if you agree. I think that's a very bear scenario. You guys already know my thoughts. My bear scenario for this cycle for this year, 2025, is 222. Right in alignment with Bring Facts, the OG himself. And my base case, base for the broskies, is 420. Happy 420, broskies. And my bull scenario, I mean, if everything just went accordingly, all the stars align, 1.1 million. All right, fam. Now for our feature story of the day. BlackRock CEO Larry Fink says Bitcoin can replace the US dollar as the world's reserve currency because of the national debt, as printed here in the headline on Fortune magazine, or news story here on obviously on the internet. But nonetheless, there's another one from Crypto Slate here. The headline reads, BlackRock's Larry Fink confirms Bitcoin can replace the US dollar as the global currency amid the rising US debt. And I watched the actual Larry Fink interview where he discusses this. So here's some of the highlights. BlackRock chairman and CEO, Mr. Lawrence Fink, officially recognized in his 2025 annual letter to shareholders that Bitcoin can challenge the US dollar status as the global reserve currency. That's right. The letter explicitly frames Bitcoin as both a disruptive innovation and a geopolitical risk should the U.S. government fail to rein in debt and deficits. Fink wrote the following in the March 2025 letter: if the U.S. doesn't get its debt under control, which we all know it's not going to, if deficits keep ballooning, which we all know it's going to, America risks losing that position to digital assets like Bitcoin, which we all know will happen. The comment marks a clear acknowledgement from the head of the world's largest asset manager. I dare say over 11 trillion in assets under management. So this could represent an alternative to the US dollar in global markets. Bitcoin for the takeover. That's right. Fink mentioned Bitcoin by name 7 times throughout the letter, while referencing the dollar 8 times. The significance of the parallel frequency in Fink's annual letter cannot be overstated. A few years back, who would have thunk that Bitcoin would have been something that you would have bought? And who would have thought Larry Fink would spend as much time talking about Bitcoin as the US dollar in the annual letter to investors? Sign of the time, broskies. The BlackRock letter outlines the split view that while DeFi is praised as an extraordinary innovation, the firm cautions that its growth could undermine America's financial primacy. The risk emerges if investors begin treating the bitty as a more stable long-term store of value than the US dollar, particularly given the ongoing federal deficits and sovereign debt levels. This framing positions the bitty as more than a speculative asset or store of value and as a macro hedge against sovereign instability. I repeat, it's a macro hedge against sovereign instability. The implications parallel similar arguments made in recent years by institutional investors, treating digital assets as insurance against monetary debasement or geopolitical volatility. And the first person I heard use that particular term was Kathy Wood of ARK Invest. She says something like Bitcoin is ultimately an insurance policy against inflation and deflation. And as Fink emphasized, two things can be true at the same time, referring to the coexistence of innovation and risk in digital asset development. Now, BlackRock's internal positioning on Bitcoin is not purely theoretical. The letter disclosed that its US-based Bitcoin ETF became the largest product launch in the history of the ETF industry, reaching over 50 billion in assets under management within the first year. It also ranked third in net assets inflows across the ETF categories, behind only the S&P. Now, retail adoption was the key driver, with more than half of the demand for the firm's Bitcoin ETP coming from individual investors. Notably, 3/4 of those participants had never previously owned an iShares product. So Bitcoin attracted all that to the institutions, suggesting Bitcoin is acting as an onboarding mechanism for a new demographic of investors. Facts. The firm also expanded its ETP offerings, and ETPs are ultimately exchange-traded products such as the ETFs, in Canada and Europe, signaling cross-border growth in institutional-grade Bitcoin investment vehicles. Now, BlackRock's goal, from my understanding, is to tokenize the world. So the next section here, tokenization position as infrastructure evolution. Beyond Bitcoin, Fink's letter advanced a broader thesis that tokenization could transform capital markets in ways comparable to the shift of the postal mail to email. Drawing a comparison to the SWIFT network, Fink argued tokenized asset infrastructures could bypass traditional financial intermediaries by enabling instant peer-to-peer asset movement. Now, BlackRock sees tokenization as a foundational shift in asset ownership, mainly through fractionalization, improving voting systems, and increased access to high-yield investment instruments. Let me give you an example of a tokenization of real estate. So, for example, currently, typically one person owns a piece of real estate. What if they tokenize a piece of real estate, hypothetically speaking, in Manhattan? They put it on the blockchain, and now all of a sudden they could have, let's say, 1,000 or 10,000 investors all owning a piece of that one real estate. This is an example of tokenization in real world play. And according to the letter, these developments could democratize capital markets by lowering the operational and legal barriers that have historically limited the retail investor participation into certain asset classes. The firm also emphasized the need for updated digital identity systems, citing India's model as a benchmark. And according to the letter, over 90% of Indians can securely verify smartphone transactions, positioning the country as a leader in the digital infrastructure necessary for the tokenized economies. The inclusion of Bitcoin as a potential replacement for the dollar reflects a material shift in institutional perception. While the mainstream recognition of Bitcoin as digital gold has grown in recent years, BlackRock's language points to a deeper economic thesis, one in which macroeconomic policy failure could accelerate a pivot to decentralized monetary systems, citing both tokenization and Bitcoin within the same strategic outlook. The letter presents a framework where digital assets are positive, systemic alternatives to the fiat monopoly tulip mania. And for policymakers, the message is implicit but pointed that the U.S. must modernize its financial systems to manage its debt trajectory to maintain its monetary leadership. And there you have it. And again, Larry Fink says Bitcoin could replace the dollar as a world reserve currency due to the national debt. Let me know if you agree or disagree. And again, welcome everyone to the Q&A segment of the live stream. I'll do my best to read your comments out loud. Feel free to ask anything you like. Shout out Laserface. I appreciate the sub. Anyone who subscribes to the YouTube channel will get the on-screen shout out, and I'll shout you out and also strike the gong. So this one's for you, Laser.